Welcome to Momentum Monday. Today is June 14th, 2020. How long since you shaved, Howard?
I just shaved a little bit. I'm going to let it grow out a little bit to give my face a little rest. Kind of like the markets need a little rest. What do you got there? Let's get everybody going.
All right, let me
Beautiful day.
share a screen. Yeah, it's a really beautiful day here in San Diego. All right, looking at the chart of the Nasdaq 100.
Mm-hmm.
So last week, after maybe a little bit of too much frothiness, when we saw some junky low price stocks going up 1,000% a day.
Mm-hmm. I saw a few 1,000% stocks. It really kind of had a little bit of envy.
Stocks that were kind of trading, 200, 300 shares a day, all of a sudden trading tens of millions of shares.
Yeah.
And definitely, I mean, it's been a high level of frothiness for the past kind of 2 weeks or so. So It was just a matter of time, but you can never really time it in advance. And for whatever reason, the Fed minutes were kind of a catalyst for a rug pull in a way. So on Thursday, we had a heavy volume sell-offs. I mean, the Nasdaq 100 went down 5%, S&P 500 went down 6%. It's kind of normal in uptrends for strong stocks to occasionally revisit the rising 20, even the rising 50-day moving averages, since they were so far extended above them. Granted, the sell-off on Thursday was pretty heavy because we had 99% of stocks being down on that day, which was worse than any of the down days on March. So we hit a new record in a way. I mean, all of a sudden correlations just jumped through the roof, volatility skyrocketed, and we had a big down day. So maybe that big down day will kind of act as a wake-up call, and the mindless chasing that we saw in many junky low-price stocks is kind of gonna be tapered in a way, at least for the next few weeks. But in the meantime, we are still in a buy the dip market, right? And this is why you saw how when the Nasdaq 100 pulled back to its rising 20-day, deep buyers just stepped in immediately, and we saw something kind of similar in the S&P 500 when we had a pullback to the 200-day, and then just the buyers just stepped in. Now we don't know. Obviously, the lows from last week are kind of as a short-term line in the sand, and if they're lost, for example, I wouldn't be surprised if the S&P tests its 50-day moving average near 290.
Yeah, I had some. That's where I was looking at. Just if I was going to add a little exposure for a trade, that's where I would be looking.
Yeah, but I mean, losing the 200-day moving average, I think it would be a big deal. Not a big deal, but definitely. We can all be talking about a bull market and a new uptrend if the S&P goes back below its 200-day and just stays there. So
we still live in a digital world, so I think until the Nasdaq shows real weakness.
Yeah, I mean, definitely Nasdaq is the leading,
and they're a long way from the 200.
Leading indicator. The biotech had a more sizable pullback, still above its rising 50-day. Since it's more volatile by nature, I think we should be looking at the 50-day as long as it stays above 50-day. And as you can see, this previous level of, it was resistance, now it's kind of acting as support near 98, 97. So as long as it stays above that level, I think we can still make the argument that it's still in an uptrend. The other leading ETF, SMH, the semiconductors, it's holding so far well above its 20-day. Listen, I mean, when I went through hundreds of charts, if not more, this Friday, I noticed that despite the big sell-off on Thursday, there's still quite a few, especially software stocks, that are looking constructively. they're still looking good.
Well, I would start with the King Apple.
And I'm kind of thinking that maybe after this big one-day shakeout, we might have entered a different market. We might have a regime change. And we just went from an uptrend into a range-bound, choppier market, in which we might see more breakouts failing and more breakdowns failing and more of a range-bound, choppy action for the next 2-3 weeks. That's my thesis, just based on what I saw, because I still see quite a few stocks, especially in software, they're looking constructively, and I wouldn't be surprised if they just trade in a range, like in a big range, to like 10-15% range for the next few weeks. That's my thesis, because many of them went up so much so fast that they kind of need some time to consolidate. So I wouldn't be surprised if they just spend some time in a range until their 50-day moving averages kind of catch up with them and they potentially form new setups. You never know. I mean, some people say that sell-off, one of the reasons behind that sell-off is the market being scared of a potential second wave, which is possible. And the market might be looking ahead and thinking that some of the stimulus will be tapered, like the unemployment checks that the government is paying. I think they're getting tapered by the end of July, and some other programs are just expiring. So the market, since it's forward-looking, might be thinking ahead that there might be some troubles ahead, especially if there is a second wave. Since in some states, like Arizona and Texas, I mean, I look at their new COVID cases graph and it's just breaking out to new all-time highs. And in California, it's kind of consolidating near all-time highs. So it's some of those graphs are not looking good.
Still very small bases though. So yeah, I don't want to get into the macro at the moment, but yeah, I think you just kind of summed it up, is that it's a great rally. If that's the meat of the pullback, the VIX spiked. So that was weird. It just didn't feel that scary to me. And yet the VIX really spiked but then it came right back down. I don't know. I'm not going to have an opinion about this because it was just such a good run. If I look at Apple, it's like a blip. I look at so many of these leaders, they just barely blipped. I look at Peloton, that looks, one of my position, it just looks like it's ready to go higher.
Yep.
It's just, I think we're entering this, like, if you look at Lulu, the numbers weren't good and the stock barely pulled back, and so it's something going on with healthcare. Shiv from Singapore sent me this Apple as a operating system for health. So I look at Peloton, Nike, Lulu, not healthcare in the terms of healthcare, I'm like fitness and health. But I think Peloton looks really strong to me. The other one that looks strong is Twilio looks really strong still. After these runs, Spotify looks really strong still after these runs. So I'm like, it's just noisy to me after these great runs, that there'll be some volatility on these massive breakouts. Now, if they fail, they fail, but usually they fail much faster. So these all look like they're flagging after huge gains. So I think you got to be prepared to see higher, it's a summer and volume will be spotty. But with the VIX still this high, if we just pull up the regular VIX, with the VIX, in the 40s still or high 30s, I don't know, you got VIX, I'm trying to pull up the chart. But with the VIX still above 30, I think you got to be prepared for big moves, intraday. And I'm still keeping my position sizing a little bit smaller. I'm looking at Elastic. That looks like it's a great run before earnings, and it's just kind of flagging. And even through the down few days, closed higher. So it's the same names for me. I'm not looking so much for new names. as I am, how are the names that I'm large in acting? And it was inevitable if we look at Boeing that these things are just, it was just kind of, they were part of the joke. You know, you make 70 points in a couple days. And these are like Walking Dead, you know, even though they may have great products, they're Walking Dead companies. So I think you could see it coming hard to time when you were going to get that volatility explosion, but there was just a lot of silliness. And then the other thing that's interesting is everybody's now copying around. If we look at Schwab, pull up Schwab, they launched like a fractional share, and they could have done this thing 10 years ago. So I think they're late to the party. Fidelity launched a fractional share. These are what I don't think people understand about this sector is these all become lead gen engines for Robinhood. It's pretty funny that like the media is doing its typical job, making fun of beginners as all the old timers add the same features to their products, and they're all breaking down. Like, so if you, it's really rather interesting. Let's pull up E-Trade. Where's their value? They are at a what valuation? 10 billion. So these people are copying Robinhood now, and only I feel they're going to be training wheels to Robinhood. And so I think you can, these may have topped out for a little while because they're all competing with each other, and Robinhood's differentiated enough product because of the UI. So I don't know, there's the leaders remain the leaders, right? It's the same, I'm just going through my list and seeing. Now, a lot of stocks didn't pull back. If we look at MKTX, Mercado Libre, Trade Desk, Restoration Hardware. So there's just, you know, considering the runs.
Yeah, this is why I said that I think that they might just spend the next few weeks in a range.
Yeah.
And considering how high the VIX is, you know, if you have the balls, you can just sell premium.
You just say balls?
Kind of, yes. So
you can't kind of say it. You said balls.
Yes, I did. Yeah.
It's a really, it's a family show. So I'm trying to think if there's anything that really stood out to me. NVIDIA is still all-time highs. Build.com, which has been a hot stock.
Oh, yeah, Build definitely showed so much strength last week.
Yeah. So I don't even know if they noticed. So I don't.
And a bunch of Chinese stocks as well, just
Chinese stocks
breaking out.
I like to say this is just a weird market. My data would say froth and sentiment. Wow, that looks great. Froth and sentiment. Jesus.
China. You're showing all the Chinese stocks that just
so you've got a sentiment. Hey, Rich, you got a sentiment that's a little bit slapsticky, right? And I can't figure out why. It's fun to make money, and kids are getting the bug, and they're communicating and they're chatting. I don't think they're really moving the markets. But then you have the underlying leaders like Apple, Intuit, Adobe.
Tesla hit 1,000. Granted, it's pulled back a little bit, but another big milestone.
Yeah, we're right. Tesla.
And I think yesterday I saw some news that a Chinese company has invented a battery that will be good enough for 1 million miles, and GE is also working on one. I mean, even if that isn't true, a current Tesla, you know, one battery charge is good enough for like 400 miles.
Yeah, and the new one will be 500 in a year.
Better than, and it's only getting better.
500 miles, you just have to own one because it's just
yeah.
California, Arizona. Once I can go one, it's just once you don't have to stop and you have podcasts and you can drive Phoenix, San Diego on one charge and cut out a half an hour of your driving time because you don't have to stop. And with podcasts, etc., it's just, you know, I think what we'll see is this air travel will continue to decline as a frivolous, you know, unless you really want to do family vacations. The interesting thing, a couple of friends were telling me it really is amazing how these outdoor stocks did well. It's hard to tell when to sell those.
Yeah. Quite a few of them have done well, but just to go back real quick on my Tesla thoughts, I think there's a decent chance that 5 to 10 years from now, the majority of cars on the street will be electric. They don't have to be from Tesla. They could be from other manufacturers, but I think the world is moving in that direction, just
Yeah.
based on technology developments.
Yeah. So I think to wrap it up today, because it's just, you don't want to make mountains out of molehills, the same leadership, whether it's, wow, that's Nicola. That to me is just silly. So what's amazing is usually these represent short-term tops, but then I look at team, which is still at all-time highs. Team, Atlassian.
Oh, team, yeah. Mm-hmm.
Yeah. So they're just not giving up after great runs. I'm just trying to think of some of the other ones. Mongo, no, not Mongo. Amazon's right there at all-time highs.
Yeah, Shopify is holding really well. Amazon as well, yeah.
So I think the market's trying to punish weaker stocks, but there's so much money flow from the Fed and from buying. So I think in a non-Fed market, in a higher interest rate market, we'd probably see a different tape. But I wouldn't fight it. I think the question people have to ask themselves that I have is like, how much exposure do you want? I'm trying to get high beta out of as little exposure as I can, because the VIX is so high, and I just don't want to be stuck in a 10, 15% move down and see my portfolio drop 20% just in the summer. But odds are we slowly trend lower in volatility. Odds are. And that just means higher prices in a low interest rate environment. And you have the leaders, the 6 leaders that are so big, continuing to take market share. So, looking at Apple and Amazon and Facebook, I don't see I don't see the bearish cases other than valuations. But with 0% interest, the valuation argument, I just don't understand. It's not a good enough argument. All right, buddy. Have a great week.
All right, Howard. You too.
Okay.